Welcome back, traders. Hopefully you're doing well. So in this video, I'm going to talk about how to find setups using price action. And in the first part of the video, I'm going to share with you guys my live trading session. So you're going to see the trades I took. And in the second part of the video, I'm going to explain what was going through my mind and why I took these trades. The market was fairly slow, but I still think we can learn a lot from today. So you guys just saw my live trading today, and unfortunately it wasn't really eventful trading, and that's unfortunate because every time I seem to record my live trading session I always get these slow boring trading ranges, and yesterday was actually a very beautiful trade. If you just learn one single pattern, which is a second entry at the key entry point, this setup, one single setup, could have made you a ton of money yesterday. So it's unfortunate that every time I record this boring price action. I'm probably going to record my videos even in different days so we can learn as much as we can, because yesterday was really gorgeous day. But today we had a small consolidating trading range and we got to learn that to trade too. So I'm going to start with identifying the lows and identifying the highs. You guys can see that the trading range, we were in this range since yesterday, so we're already trading for several hours. So I need to identify the the highs and the lows, because market oscillates between the lows and the highs. Now, we are only interested in buying the extremes and selling the extremes. We're only interested in buying the lows and selling the highs, and preferably fading the breakouts. We really want to avoid trading in the middle, and I didn't follow my rule. I broke the rule. I made a psychological error and I got punished for this, but we're going to talk about this. So as I'm watching the prices go up and down, mind you, this is a healthy trading range. Prices are going from the very highs to the very lows. As you guys can see, up, down, up, down. This right here is unhealthy because we can't even reach the lows and we can't even reach the highs. So this is very difficult to trade, and this is very easy to trade. Now, as we are making our way lower, you guys have to remember the only thing we have to follow and only thing we can follow in trading range are our short-term trend lines. So we have to draw the short-term trend lines, because after trend line will break, there will be a retest of a new extreme. So you're working lower, you have a break, attempt to make a new low, but you're fighting strong support. You're working higher, you draw this trend line, you have a break, and you're expecting for prices to make a new high. So as prices bounce off of here and you made a triple bottom, you're now expecting a lot of people to start buying, and they did. They pushed prices above the EMA and pulled back with a nice bullish bar. I'll be honest with you, this is very tempting trade, because you're coming off the lows with a triple bottom, and look, you have a first leg working higher, pull back, you have a second leg working higher. So you're expecting a second move to the very high of the trading range. Same thing I did right here. I measured this leg and I put it here, and we didn't quite make a measured leg, but that's because there's a strong support in play. So always look for second entries and two-legged moves, because it's a very, very common setup. But this is in the middle of trading range, so I still think it's better to sit on our hands. But it is very tempting, and since we are waiting for a new high and the second leg, and we're waiting for prices to reach the highs, there's a big chance we may reach it. Nevertheless, I waited for prices to break these highs, and all the people that went short right here, they probably keep their stop loss at the very high of these highs, 1 or 2 ticks above these highs. That's where they keep their stop loss, and this is why the big players, the hedge fund managers, the institutions, they take advantage of these stops, and this is why they push the market lower. I made a video about that in the past, but most breakouts will fail. So this is my first trade that I took, and as scary as this looks, I made plenty of videos where I demonstrated, and you guys witness how high probability setup fading a breakout really is of this trading range. So you have to really believe this strategy, believe the price action, because that's how market operates. And you push lower, and I was actually ready to go long right here if we trigger above this bar, because this would be the new high, pull back, first entry long, pull back, second entry long above the EMA, and the market's starting to look quite bullish, but we didn't happen. Trading range prevailed and prices pushed below the EMA. Now, what I did, once again, I'm following the rules and I'm drawing the short-term trend line. This is a nice short-term trend line. You have a break and you have a new low, plus you have this measured leg working lower. You pull it down here and you're very close to the measured leg. You're just a few ticks shy. And what I did, because I did a cardinal mistake here, I traded the market that I wanted and I didn't trade the market that I was getting. I found my trend line something like this, and if you put it like this, it doesn't really look too good. So I put it like this. This looks quite tight, but you have this massive overshoot, and I basically did everything in my power to treat it as what I wanted to see, and I took this entry right here because I treated it as a first entry long, pull back below EMA, second entry long, failure. But you're already moved to down, you're already in the middle of the trading range, and the bar is, we touched the EMA a little bit, but the body is away from the EMA. And overall, it is a messy setup because two-legged move down already passed. We have a break and a new low, so downtrend should be over. And plus we're in the middle of trading range. So I got punished here for making a mental error. That will happen, but I was break even. But nevertheless, you know, trading is about having losing trades, so you have to embrace it. Now, the market was not, after that really slow. Prices were in this congestion, and as you guys can see, most breakouts of these congestions will fail. So there will be a fail break higher, pull back lower, and you have fail break lower, pull back higher into this congestion. Now we are here strictly in the middle. The trading range is no longer healthy, like here when you're going from the highs to the lows. You're not even making it to the very highs or to the very lows. You're just getting a lot of stims in the middle of trading range, and this is a no trade zone. This is a no man's land, and you can get chopped to pieces so easily that this is much better to avoid. And price is pushed below, and I was expecting some nice setup of these lows. This is how I'm basically running an autopilot. I'm just watching the key entry points at these extremes, and we're looking for setups right here. But we didn't even make it to this support. Prices just bounce here. You have a second entry short right here, two-legged move to the EMA, but you don't want to go short after all the move happened to this support. So you just have to wait, and prices just kept chopping, and I closed the shop because, you know, the market was really slow and I'm not going to sit here for hours. We eventually broke this trading range, and now, as most breakouts of trading ranges will fail, this one didn't fail, and that's okay because the breakout will eventually work out. But remember, look, there is no setup. There is no setup, there is no bullish bar and break above that we would be interested in buying. So we don't want to force it. We don't want to blindly buy the failed breakout. We want to wait for the wait for the proper signal bar, because if you buy blindly, this is what can happen. It sounds good on paper, but this is what can happen. In just one time, it will fail, and you will be moving your stop loss lower and lower because you will be giving it more and more room. You're hoping it to go back. It's not going to happen. You don't want to argue with the market. Close your limit order if you took this trade blindly, which you shouldn't have, but in case someone did. So remember, this breakout worked, but there is no sign of bullish activity whatsoever. So we are not interested in buying this. And as always, as I demonstrated in my previous videos, when I'm looking at the trading ranges, I'm measuring the tier. This is what you not only have to measure the lag, you can also measure the tier of a trading range. And if you copy it, put it lower, you guys can see that we pretty much, I actually had to correct something like here. You want to tweak it a little bit, but this is why price action worked. You guys can see how we actually found a lot of buyers here at this area, which we eventually broke down because we have a FOMC, which is no surprise. And look how markets started to pick off. So this is very common because when people are anticipating the news, they will sit on their hands and let the market to do whatever it's going to do. And after FOMC, then they will start trading. I don't really like how small the bars look. I'm going to just enlarge it. And I saw a good setup right here because prices broke this trading range and now they went into this downtrend. You're making lower highs, lower lows. You're below the EMA. And you have a two-legged move to this EMA. You have one leg, pullback, second leg. You have a new low right here. Technically, you have a first entry short, second entry short, but you're inside of this channel and you know you're waiting for a break and a new low and you're not touching the EMA. So you want to wait. You really want to let this correction play out with the break and a new low, new high, and you're really touching the EMA right now. So this was a high probability setup to second entry at the key entry point, and prices then turn down lower. And as FOMC is continuing, you really want to stay away, trading a few minutes, like 30 minutes before and after the FOMC. You want to stay away from this. You don't want to try to predict what's going to happen. Just sit on your hands, and it's really not worth it because you can get stopped out so quickly that it's not really worth it. And by the way, guys, take a look at this. This is a 90-degree move. And it just, as I keep mentioning, those 90-degree moves, these big sell-offs or big rallies, they are not long-term sustainable. They will pull back to the EMA or straight up reverse, and this is what is happening right now. So even though you see such a massive sell-off, you have to expect some sort of major correction, because 90-degree moves, this is almost straight up 90-degree falling knife. Market just cannot keep going lower and lower. This is, limit moves are no longer, valid. They were 30-40 years ago, but now the market is regulated and it will not go lower and lower. But the price action still works the same even during the news. So I'm going to wrap up the video. Just, you have to practice the patience when you're just watching this market. You cannot really force to trade. If you didn't take any trade at the beginning of the day, for the majority of the part, you probably did the right thing. So don't beat yourself up too hard for not taking a trade, because that is the smart thing to do. So hopefully you guys had a good trading day, even though it wasn't really ideal. But hopefully you guys practice your trading skills, psychological skills, and remember, trust the process. So I'm going to see you guys in the next one. Take care, everybody.